Every time the Bank of England speaks, the British pound moves, sometimes sharply. That is why, if you trade any currency pair involving the pound, understanding this institution is not optional, it is foundational. The Bank of England, known as the BOE, is the central bank of the United Kingdom. Founded in 1694, it is one of the oldest central banks in the world. Its job, in simple terms, is to keep the UK economy stable. It does that in two ways: by controlling inflation and by overseeing the health of the broader financial system. On inflation, the BOE has a specific target, 2%, measured by the Consumer Price Index. When inflation drifts too far above or below that number, the bank acts. Its main tool for doing that is the base interest rate, the rate at which it lends to commercial banks. Changes to that rate ripple through the entire economy, affecting mortgages, loans, and crucially for traders, the value of the pound. The body that sets this rate is called the Monetary Policy Committee, or MPC. 9 members sit on it, including the governor of the BOE and several external experts. They meet 8 times a year. After each meeting, they announce whether rates go up, down, or stay the same, and they publish a detailed statement explaining why. For Forex traders, these meetings are some of the most important events on the calendar. A surprise rate hike tends to strengthen the pound because higher rates attract foreign capital seeking better returns. A rate cut tends to weaken it. But here is something many newer traders miss. It is not just the decision itself that moves markets. It is whether the decision matches what traders already expected. If a rate rise was fully priced in beforehand, the pound may barely react, or it may even fall as traders sell the news. Beyond the base rate, the BOE also uses quantitative easing, buying assets to inject money into the economy, and quantitative tightening, which does the opposite. Both affect the pound. And governor speeches can move markets almost as much as rate decisions, because traders are always listening for clues about what comes next. That practice is called reading forward guidance. The pound is one of the 5 most traded currencies in the world. BOE decisions do not just affect GBP pairs in isolation, they interact with decisions from the US Federal Reserve and the European Central Bank, creating shifts across multiple markets. Trading around central bank events carries real risk. Volatility can be sudden and significant. Only ever risk what you can afford to lose. Your practical takeaway: before any MPC meeting, check what the market is already expecting. The gap between expectation and reality is where the price movement lives.